Welcome back to the show, everybody. Well, we've got the news for you today. The Silicon Valley Bank and Signature Bank debacle, the bank runs, the collapse. Now the federal government steps in, U.S. Treasury. And by the way, we've got Jeremy Allaire from Circle setting the record straight and Brad Garlinghouse about the exposure to Ripple from all of it. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. Right now, $978 billion market cap for crypto. It's up 1.8%. Good morning, everyone. What a weekend it's been. And I tell you, buckle up, because I don't think it's all over yet either. I think we're just getting started here. Bitcoin, 20,400 plus. Ethereum, 1465 and change. Tether market cap, 72.1 plus billion. And XRP, 35 cents. It's off 0.8 in the last 24 hours and 4.2 in the 7-day. Let's take a look at this. Boy, I tell you what, Jason Cousins from Glint here. If you want to get gold and you want to be able to hold it in your account and have an app on your phone and a MasterCard debit card to go with it, this is what I like about it, because on my own level, I get to be my own little bank with my own gold, and it's real physically allocated gold. And during times like what we're seeing right now, I tell you what, I think I'm going to be topping off my card, just my digital perspectives here. It says, you may have seen in the news, Silicon Valley Bank has collapsed with its failure being overseen by the U.S. and the UK regulators. We'll get into that in a moment, too. Please be assured that Glint client money is not held with any SVB bank. That's what's going on today, right there. So know that. Check out the link of my sponsor underneath. Check it out. See if it's right for yourself. I absolutely love it. Compliments a digital asset investor at Michael Branch. Give him a follow right here. Well capitalized with reserve fractional banking. Yeah, right. Yellen affirmed the banking system was really safe and well capitalized as well as resilient. And I tell you, and here's why. Because this is from the Federal Board of Governors here. Shout out to Nick for this one here. Signature Bank has been closed. All depositors of Silicon Valley Bank and Signature Bank will be fully protected. Shareholders and certain unsecured debt holders will not be protected. New Fed 13.3 facility announced with $25 billion from ESF to backstop bank deposits. And that's why they're so resilient. She spent a lot of time yesterday, too. She came out earlier in the day and said, we're not going to do anything. Then they changed their tune. This from Ripple advisor here, Anthony Welfare, says no risk, but there is risk. Is the technology sector not very, very big in all Western economies? Welcome to 2023. He shares here this, and it's Mr. Hunt said from the Bank of England has made it very clear there is no systemic risk to our financial system, so people should be reassured on that basis. But there is a serious risk to our technology and life sciences sectors. You know, then let's quickly look at this, too, because this is what happened over in the UK. The banking giant HSBC announced that its UK arm is acquiring Silicon Valley Bank UK Limited, and it's 121 a share is what we got here. And if you go into it, that's basically what they did is they picked it up for £1, and they basically talk about the fact that now it is backed by the full confidence of HSBC. Now that's SVB UK, right? Silicon Valley Bank UK. Now, we know that obviously the Fed is bailing out Signature Bank and SVB as well. This, I believe, is what is going on here. And I don't know if you could say it any better or more succinctly than he said it right here. Shout out to Meta Lawman James Murphy. We've had him here on the show, and we hope to have him again very soon. The U.S. government's coordinated plan to asphyxiate the digital asset ecosystem continues apace. That's exactly what I think is happening here. Now that Silvergate Bank and SVB have failed, many of the major players in crypto, exchanges, stablecoin issuers, miners, hedge funds, etc., have shifted their liquidity over to Signature Bank, which, of course, puts a big fat target on the back of Signature Bank for bank regulators, which has now been closed. If you care about the survival of crypto in the U.S., you may want, or you might want to say a prayer for Signature Bank. He even goes on to say here, even if you're a committed self-custody holder, the availability of fiat on and off ramps is a critical component of healthy digital asset ecosystem. You know, this is very similar to the conversation I had with Meta Lawman on our show. We talked about the SEC versus Ripple case and where it was at the time when we spoke. And then we went on to speak about how we thought the government would take control of this space and bring it into the arms of the legacy firms out here. And I suggested and still suggest that USD Tether has to have a day of reckoning or blessing, one or the other, from the U.S. Treasury, Department of Justice, so forth, the Fed. And when I think of what we're seeing this weekend, I think that what we saw here is that we've seen the U.S. government literally step in one step beyond that and say, well, we could create that choke point at the banking level and don't even have to worry about USD Tether at this point. That could be another conversation for another day, but look at what they did. This is massive because to the point that Meta Lawman's making here is you have literally just you just strangleholded crypto and everybody in it, asphyxiated everybody. I mean, it's all now sitting at the government's doorstep on what happens next, picking the winners, picking the losers. Right? This is the moment. I don't want to say that we've all been waiting for, but we knew was coming. Right? I don't want to see anyone harmed or hurt, and I take no pleasure in saying any of this stuff, but this moment was not unforeseen. It's just we don't know how big and how long it lasts and who the winners actually will be. In a second, we'll hear from Brad Garlinghouse. But right now, let's hear from Circle. Stablecoin issuer Circle Internet Financial said Monday that U.S.'s $3.3 billion in USD coin reserve deposits held at the failed Silicon Valley Bank will be fully recovered when banks open on Monday in the U.S. And they said that they'll go into their own pocket to do what they need to make that right. And I'm glad to hear that, obviously. So here we have this now. Cross River Bank is Circle's USDC's new partner for automated settlements. Not too long ago, Cross River Bank integrated Ripple for real-time international payments. This is after about 9 hours ago, Jeremy Allaire from Circle said that the Circle USDC's operations will open for business on Monday morning, including with new automated settlement, their new partnership with Cross River Bank. So there you go. Knee bone connected to the leg bone is what we're looking at. Shout out to XRP Crypto Wolf for that. And Brad Garlinghouse setting the record straight on Silicon Valley Bank questions here. He says Ripple had some exposure to SVB. It was a banking partner and held some of our cash balance. Fortunately, we expect no disruption to our day-to-day business and already held a majority of our USD with a broader network of bank partners. Thank goodness. Obviously, a lot is still unknown about what happens with SVB, and as is the case with many others, we hope to have more details soon. But rest assured, Ripple remains in a strong financial position. As a shareholder, I love hearing that. He goes on to say here, it's ironic that so much of what's happening as companies scramble to make payroll highlights how broken our financial systems still are, i.e. wires are still not 24/7, 365. Rumors lead to collapse and the friction of moving money within a deeply fragmented system. You know, I said this yesterday, I believe it was, right? Is that, you know, I'm not making light of anything, you know, it's like, how important would it be to banks right now if they were able to access dormant capital that's been locked up so they can make cross-border payments? How much would that mean to a bank today? I bet it means an awful lot. I really do. And to that point, John Deaton picks up on this as well. He says, is it me or did Ripple's CEO just say that this crisis highlighted desperate need for a disruptive technology that modernizes the U.S. banking system? And he sure did. And rightfully so. Having the Fed constantly bail out entities is not a solution make right there. I can tell you that much. And honestly, all of this comes from fractional lending, right? Oh, brother. It's not over, ladies and gentlemen. Now we have to watch out for what's going on here. Shout out to Eleanor Terra from this one. This is new from the U.S. Treasury now. The Council has discussed the funding the Federal Reserve Board was making available to eligible depository institutions to ensure that banks, saving associations, and credit unions have the ability to meet needs of all their depositors. It says here, the council also discusses the funding the Federal Reserve Board was making available to eligible depository institutions to ensure the bank, savings associations, credit loans ability and need of all their depositors. The new facility will be a significant source of liquidity, collateralizing high-quality securities to eliminate a banking institution need to quickly sell those securities in time of stress. This will bolster the capacity of the banking system to safeguard deposits. You know, you have to ask yourself, like, how is this not already a thing? How, right? And then it goes on here to say, if you just really want to get right to it, the financing will be made available through, listen to this, the creation of a new bank term funding program known as BTFP. It sounds like they're just doing more of the same, offering loans to up to 1 year in length to banks. And then it lists, obviously, everybody there. These assets will be valued at par, qualifying assets as collateral. You get the rest of it. It's like, I tell you, at some point, they're going to have to deal with the fractional lending as the real issue to all of this. But rest assured, they're going to blame crypto. That's what they're going to blame here. And then the government's going to come in and do whatever they want and pick the winners and losers, just like they did this weekend. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.